Good morning everyone and welcome back to Morning Markets. Today we're going to cover the market impact from yesterday's UK CPI print, and we're also going to update you further on the debt ceiling talks in the US and the impact on markets. Now, as my colleague Raj updated you yesterday, UK CPI fell, but it actually beat market expectations. Inflation was stronger than expected, and the core measure, the stickier measures of inflation, actually rose. And this had an adverse impact on both bond markets and equity markets yesterday. Bond yields rose because markets moved to price further interest rate rises from the Bank of England. The market now expects base rate to move from 4.5% currently to around about 5.25 percentage points by September. So that's another 25 basis point increase at each of the next 3 meetings through the summer. And of course, this had an impact on equity markets. In particular, home builders sold off because of the expectation that mortgages are going to become more expensive and demand for new build properties will decline. But also, unusually, we saw an impact on the insurance sector. And that's because of the business model of some of the larger insurers in the UK who buy pension books from companies and have the interest rate risk on their own books. And of course, with interest rates rising so quickly in market expectations as they did yesterday, there are fears that some of these business models may have been adversely impacted by the rise in interest rates. Now, if we move on to the US, you'll see on screen that markets had a poor day yesterday in the US, and this is because of the impasse in discussions between the Democrats and the Republicans on the debt ceiling. The Democrats refused to cede to the Republican demands for modest spending cuts, and equities had a poor day through European hours, which is what you can see on screen. However, yesterday we saw a remarkable earnings update from the AI chip manufacturer Nvidia in the late hours for Europe. So soaring demand for chips in the latest generation of artificial intelligence systems, such as those for ChatGPT, led to a remarkable earnings update from Nvidia for this quarter. They now expect to see sales of $11 billion for the 3 months through to the end of July. And that was against market expectations of only 7.2 billion. So a huge beat, almost 50% beat in revenue guidance. And this led to the stock price rising 27% in after hours. And that has helped lift equity valuations later hours yesterday, which you'll see tomorrow in tomorrow's update. And also, the share price had already been up 50% this year. So it's remarkable that this company is leading the charge in the next generation of chips. Now, we've mentioned the debt ceiling, so please do join us tomorrow for the podcast, which will be chaired by our CIO, Jeff Casson, and Chris Leyland, Head of Investment Strategy, will be joining him, where him and the team will all discuss the debt ceiling and the potential impact on markets. Thank you.